Hi, my name's Tom Elliott and welcome to another financial markets update for Hodges Real Estate. Well, financial markets around the globe have been very volatile of late. Why? Because they're all worried about a thing called the Grexit, the Greece exit from the euro. Now, as we speak, negotiations are still ongoing between the Greek government and the rest of Europe. My tip is that eventually a deal will be done. It is neither in Greece's interest nor the rest of Europe's interest to kick Greece out, but you never know what might happen. If Greece does exit from the euro, share markets will probably go down, the euro currency will go up, and there will be quite a few financial shockwaves around the world. But as I said, I think that's most unlikely in the current scenario. As to the local economy, well, I think it's slowing. I reckon growth at the moment is around 2 to 2.5% per annum. Last month's budget with Joe Hockey suggested that growth would return to 3.25 to 3.5% per annum. I have my doubts about that. Having said that, small business spending is up because the government is giving everybody a $20,000 instant tax write-off for buying assets in the current financial year, which by the way is almost over. Interest rates, difficult at the moment. Recently New Zealand actually cut its interest rates, and statistically what New Zealand does in the interest rate markets, Australia soon follows. Now I think fixed rates in the home loan market have probably bottomed out. Having said that, the Reserve Bank Governor Glenn Stevens has warned of even higher house prices to come. To me, this suggests that he's thinking of a further 1 or 2 cuts in the official rate of interest here in Australia. I reckon variable interest rates will probably bottom out another 25 to 50 basis points lower than where they are now, but I really think we have seen the bottom of fixed term interest rates. House prices, well, I've got to say the housing market in Melbourne and Sydney continues to be very, very strong. Apartment rate clearances are around about in the high 70s week in, week out. Houses in the low 80s, in some weekends up to 85% clearance. This is near boom time conditions. Words of warning though. I've seen it up in the Gold Coast. Asian investors now snapping up Gold Coast property. This is always a bad sign for Australian property markets because the Gold Coast is a very speculative market. On top of that, I've also seen that some Australian property spruikers are now very active in China, selling houses in Melbourne's outer suburbs to Chinese investors. So, is this the sign of a boom? Well, only time will tell. Right now though, Melbourne's property fundamentals are very, very sound. We've still got very high immigration, we've got strong interest from overseas. As I mentioned, we've got ultra low interest rates. We've got an economy that is stable. These are all very, very good signs for house prices. Anyway, of course, if you're thinking about buying or selling a property, be it your primary residence or for an investment, don't hesitate to contact your local Hodges office. Their input into the process can only add value. For more, go to hodges.com.au. Thanks very much for your company, and I look forward to doing it again next month.